This is not financial advice, not legal advice, for entertainment, educational purposes only, and anything I say is my opinion. Please don't make any financial decision based on anything I say in these videos. That being said, hit the like button, subscribe button, all that YouTube algorithm stuff so you get the videos I put them out. See that I'm thinking, see I'm analyzing that data. But like I tell every day, the data they release us is false. Many give us a false narrative of the market so we can make bad trading decisions. Listen, you guys know I talk about the creative accounting of these bad actors. They have hundreds of millions in shares sold, not yet purchased, but somehow when they do their accounting, it's not counted as debt. It's not counted at all. Sometimes it's even counted as revenue. Okay, and then they say, "Oh, I made $10 billion this year, or $10 billion this quarter, but I sold 20 billion of shares sold, not yet purchased. I got $20 billion in that I didn't do anything for. I didn't pay for it. I just sold it into the market. And now it's considered profit." So I'm like, yo, how can this work like this? And then I decided to do a little investigation. You know, the DD, they say we don't do. So I said, let me go look at GAAP. And GAAP is a generally accepted accounting principles. Okay? And this works when people do accounting. When people do accounting. But guess what? When it comes to the investment, the financial industry, they made special GAAP rules for these institutions. Would you believe that? The generally accepted accounting principles that's used all over the world in all these different markets, when it comes to these bad actors on Wall Street, they sat down with GAAP and they made GAAP rules, accounting principle rules, especially for the investment industry, so they can count what I consider to be debt. Because if you buy or take something that you have to eventually give back, that is debt. That is debt. But these guys don't think so. These guys don't think it's debt, and then they spoke to the powers that be, the people that write these GAAP rules, and they made rules for themselves. They made rules to make it acceptable to have 65 billion in what I consider to be debt, shares sold not yet purchased, but it's not counted on their books as debt, so they can claim they made $20 billion, $10 billion, because the 65 billion in shares sold not yet purchased technically isn't debt, because they made special, generally accepted accounting principles for their industry. Okay? These guys have all the rules bent in their favor. They control all the rules. And even with all these rules bent in their favor, they still have to rob and steal from retail investors, pension funds, and institutions that follow the rules in order to make a profit. So how are they smart money? Anyway, please leave some comments. Tell me what you think. Do you think it's fair that these guys can make up their own accounting principle rules and have it accepted industry-wide so they can do whatever they want and claim profits when in any other industry it wouldn't be profit? Anyway, have a great day. God bless, and I appreciate y'all on this journey with me.